can't we fix our tax policy? And the questions that we'll be answering, seeking answers to are, what are the principles on which our tax policy is based? How supportive is our tax policy to investment and growth? If there are impediments, can we identify them and change? How distortionary is our tax policy? Our current systems seem to be based on a withholding regime. Banks, utilities, and other businesses are expending resources collecting taxes for the FPR. Can this be simplified to improve revenues? Why is our policy so volatile? What steps can we take to reduce the uncertainty that agents and markets complain of? Should tax policy increase transactions? Does it? How? And solutions to it? It is said that simplification of policy is an important goal and has payoffs in growth. Can our tax policy be simplified without losing revenues? Suggest strategy and time frame to do it. Do we have too many taxes and high rates? Can we simplify and lower rates to increase revenues? Value-added tax has been a problem for a long time. With tax administrations fragmented provincially, how should we approach the subject for a long-term resolution? And the last question is, what tax handles should be there? This session will be chaired by Dr. Nadeem Vice Chancellor PIDE, and among the panelists for the session we have Mr. Shahid Hafiz Kardar. Mr. Kardar is the Vice Chancellor for Beacon House National University. He's previously served as Governor for the State Bank of Pakistan and Provincial Finance Minister. He's also been member of the National Commission for Government Reform and the Banking Laws Review Commission, and Chairman of the Punjab Education Foundation. He's authored 3 books and written several research papers covering economic and social issues of the country. A second panelist is Dr. Haque. Dr. Haque is an advocate for the Supreme Court of Pakistan. He is also a partner at Hosema and Ikram, Pakistan's leading law firm specializing in taxation, constitution, and corporate laws. He has authored several books and numerous articles on taxes, public finance, political economy. We have Dr. Atul Maqsood. Dr. Maqsood is one of Pakistan's eminent economists. He's the founder of Department of Economics at NAST. Prior to joining NAST, he's also served as a researcher at PIDE and Kuwait Institute for Scientific Research. His extensive research has been published in the shape of various books, journal articles, and research reports. We also have with us Dr. Hamid Atiq. Dr. Hamid Atiq Sarwar. Dr. Sarwar has acquired extensive professional experience by serving in Income Tax Department as well as the Inland Revenue Service. He's held several senior leadership positions, including Chief Commissioner RTO Rawalpindi, Commissioner LTU Lahore, and has also worked as a trainer at Civil Services Academy, Pakistan Administrative Services Academy, and Directorate Journal of IRS Training. So I'd like to hand it over to the chair, Dr. Nadeem will have to proceed from that.
Mariam, I think we can move straight to the speakers. They've been introduced. Let me add Dr. Hafiz Pasha. Unfortunately, couldn't make it at the last minute because he was unwell. He called, he was apologetic, but we will have Hafiz come and talk at PIDE as soon as he's well and he'll come from Islamabad. Hafiz Pasha, you know, is one of our eminent economists and an old comrade, so Hafiz will inshallah be with us. But right now, we have Shahid Kardar. He and Hafiz have written this paper together. Shahid is no less than Hafiz. He's himself a very well-known economist. We disagree often, but nevertheless, that's beside the point. But Shahid will do a good job. So Shahid, over to you.
Thank you, Dr. Nadeem. Yes, we tend to disagree on a number of things, but regrettably on this one, we seem to be on the same, reading from the same hard disk on a number of issues. Dr. Pasha and I have worked extensively on a number of areas. We've written extensively at most of what we've been writing. There have been longer pieces in the Business Recorder. He couldn't make it, so he asked me to make this presentation. I drafted it very quickly There are more questions than answers, but nevertheless, let me just provide a context. You see, as we presented what we think are the tax reforms in the medium term, but we also recognize that there are present circumstances. We have an IMF program, whatever you want to call it. So there is an issue of transition as well. So we've looked at the tax reforms both in terms of a transition arrangement as well as what to do going forward. The first part, I'll try and be very brief because I know there are a number of speakers and probably have much more to say than I have. We try to summarize the issues concerning contributing to the fiscal imbalances. We find that the overemphasis on tax to GDP ratio actually sidesteps the issue of expenditures, which to us, the expenditure side of the equation really is a bigger part of the problem than we were able to accept. And so are matters relating to tax policy objectives, priorities, tax structures, and of course, administration and quality of governance. Now, for us, it's very obvious what the objectives should be. Dr. Nadeem has already summarized them, but just to remind ourselves, it has to be. I'm amazed that I wrote this yesterday because Pasha hadn't come, and this morning I saw what you had written. So I'm beginning to wonder what was going on. So achieve a simpler, non-discretionary. In fact, we have papers, two papers being distributed. In fact, 3 papers being distributed of the work that we have done, both on tax reform and expenditure reform. So achieve a simpler, non-distortionary, transparent, and a much more friendly tax system. We need to support a shift to higher revenue yielding and obviously a more moderate tax regime. Make the burden much more equitable based on the ability of various social classes and economic groups, income groups to actually bear the burden. So promote, Dr. Nadeem reminded us, promote growth, investment, saving, exports, and employment. Minimize the multiplicity of taxes, that's a huge issue, and the escalation of tax rates. And we need to promote, obviously, integration and cooperation between the federal and provincial governments. I'm not going to dwell on the NFC award, which we initially wanted to. I left it, a little bit away what I meant by promoting integration, but I'm happy to take it any questions, and create, of course, a more modern and functional tax administration. These are some of the numbers that, okay. I'm not going to go into them. These are the issues. We all know what they look like, direct taxes, who's paying who's paying what. If you come down, you see what the data is, and this is all current data. Thanks to Dr. Haque as well, and of course, the numbers what we get from the FBI. Reasons we all know by now, Dr. Nadeem reminded us, narrow tax base, the exemption, the failure to exploit agriculture, property tax, services, which are now being done, at least services now being done. Many of them are really provincial domains, and the rest we all know poor governance, evasion, and so on. Dr. Nadeem reminded us that there is a lot of arbitrariness in our tax structure. Over the years, everything is driven by revenue consideration. Take just one example, 68 withholding taxes. 45 of them only produce 2% of the revenues from this system. Add to it the role of the economic actor as a withholding agent even for GST on goods and services. And they're having to deal with 2 different agencies, and you can see how the cost of doing business gets raised. I mean, I'll use the example of the university I'm at. We have barely 1,800 students. There are 2 people, we are a not-for-profit organization. We have a tax exemption simply because it's in education. What is interesting, that two people permanently employed have to actually look at the withholding tax. Permanently employed. The rest of the finance department, as you can imagine, of an institution of 1,800 students, there can't be that many transactions because the fee bills are only once a semester. There are only 3 other people in the finance department, 2 out of 5, 2 are actually just operating as withholding agents for FBR and the PRAs. And what is interesting is we are less than 10 years old and we've been audited 5 times. And each audit has taken us 6 months. We've had the pleasure, and of course, as Nadeem reminded us, that technology is so good that all returns are of course online. But every time we've been called, we have to provide hard copies. Needless to say, vans are taken to the tax office with files and so on, which they ask us to leave. And when we say we can't because these are original documents, they're saying, well, that's your problem, not ours. So then we, of course, as Nadeem reminded us, we have non-filers. I mean, we are the only country where there is a legal category for non-filers. I never thought other jurisdictions there would be tax evaders. I never thought. But we have a category called. Now, what another interesting example of what is going to be transactions will be the introduction of the CNIC requirement for purchases in excess of 50,000. So we used to have flying invoices, now we will have flying CNICs. And I can assure you, because I know businessmen who have CNICs of people who live in Fatah and of Waziristan. And of course, if you have to go and chase them in Waziristan. But then, as Nadeem reminded us, is there any valued asset that you and I can buy that I don't have to provide a CNIC? There is a biometric identification of bank accounts. So good data sets and a good IT system should be able to handle all. Taxable capacity. Nadeem mentioned the tax to GDP ratios. I thought just wanted to remind ourselves. I didn't want to talk about the fund, but I knew Teresa was going to be here, so I thought I might as well mention it. They want to raise the tax to GDP ratio to 16.7%, 5 percentage points in 3 years. So what is our taxable capacity? Must surely be a function of per capita income as well. We think it's under 14% of GDP. Taxable. Sri Lanka with 3 times the per capita income has a tax to GDP ratio of 11.7%. India with a 60% higher per capita income, 16.2. Indonesia, which has 3 times the per capita income, has a tax to GDP ratio of 12. Malaysia with 8 times the per capita income has a tax to GDP ratio of 15.5. Bangladesh, which is 35% higher, has a tax to GDP ratio of 8.5. So I don't know where this number of 16.7 comes along. But, so what is tax revenue supposed to do? It's supposed to finance expenditures. You know, the losses of the PSEs, you know, the losses in the circular debt. We had the 18th Amendment. There are still 43 divisions of the federal level. Now, reasons are fairly clear in terms of political economy. No self-respecting DMG wants to retire as joint secretary. Politicians who won elections want to be ministers. So you have to have 43 divisions. provincial governments, when I was the finance minister in Punjab in the year 2000, had 22 departments. I used to look after 7. And I used to argue at that time there were 5 too many. Now we have the privilege of 48 departments. So it's the bloated size of the public sector which we all have to finance. And just to remind ourselves, I'm not going to talk about interest rates because what has happened after the NFC award, just looking at the first 6 months of this year, taking into account revenues, all revenues of the federal government, taking out the provincial share, you are left with 1.6 trillion. 1.3 trillion is what they've already paid as debt servicing. So we have 300 billion. And the defense expenditure, just to remind ourselves, for the first 6 months was 594 billion. So defense expenditure is also being financed by government. So the tax reforms agenda for the transition, before I come to longevity. So the direction has to support equity and fairness and remove distortions. And of course the uncertainty. As Nadeem mentioned, the uncertainty part, I find it fascinating. The government, everyone wants the private sector to take a long-term view. Okay. But the government, which is supposed to give the signal, cannot think beyond tomorrow. You know, why? I mean, it doesn't make sense to me. How can you expect the private sector to take a long-term view when the government can only take a short-term view? And I understand the factors which force it to think in the short term. But the private sector actually looks at those signals. How can you expect me to think in the long term and make these long-term investments and not to speculate funds? So we need to remove distortion through a more comprehensive taxation of personal income. So we move away from the notions of fixed taxation on incomes from dividends and interest and so on. We need to end special categories of taxpayers. So withdrawal of tax expenditures and the SROs that Nadeem mentioned. We need to look at the extension of the holding period for exemption from capital gains. By the way, the paper that we've distributed actually mentions exactly this with details and of course estimates. There needs to be an integration of the GST and the harmonization of tax rates. We again developed a proposal that exports, in our view, should either be zero rated or, in fact, a cash incentive scheme paid by the State Bank of Pakistan or received for exports. This will be revenue neutral if you want to continue with the present system. So the best way to do so, because GST refunds won't be coming. So you might as well do it that way, and it will be revenue neutral. And our estimate is, and we've done these estimates, we can share them with you, that you get a 10% cash incentive at that time is equal to whatever. So the calculations have been done. The introduction of ITPs as reference prices only, essentially to check under invoicing, after rationalization of the import tariff regime. And I know Dr. Manzoor will be talking about it, which is presently too complicated, as Nadeem reminded us. It's driven by revenue considerations. It's failing us from becoming a competitive economy and enabling us to become part of the global supply chain. We need an in-depth study of SROs to first rationalize the scheme and then get parliamentary approval for the substantially reduced list of SROs. We need to look at property tax, just to remind ourselves. Mumbai as a city collects $750 million as property tax, while the entire Punjab province collects 75 million. Finally, because I wanted to be brief, this is what we thought as the second generation reforms of the rest. This is a 5-year time frame. We need to start by this continuation of the fresh issues of the 5,000 rupee note. It was criminal that we started the 5,000 rupee note. No minimum tax on turnover, rationalization of the withholding tax regime, merge of rental income into total income. Capital value tax should be capital value tax / wealth tax / inheritance tax. You believe in the inheritance tax. The wealth tax, of course, will become an annuity as opposed to the inheritance tax, depending on the political economy, which one you pick up. And we've done some work on the capital value tax, and the wealth tax existed. We would prefer the inheritance tax as the most sensible way to go forward. We also need to review the audit policy. We contemplated what Dr. Nadeem spoke about, a self-assessment scheme, the old scheme, linking it up with essentially showing a revenue increase every year, and provided to make sure that I do not start a new corporate entity every year to avoid having to raise my tax revenue every year. Policy on tax holidays, CPAC, AJK, Gilgit, merged areas. 3-year averaging for advance tax rather than what it is right now. Treatment of machinery input with respect to GST, because that is also disincentivizing investment. The accelerated depreciation allowances have also been slashed. Again, it is going to discourage investment. That's hardly something we need. We need to remove all excise duties on services, installation of the point of sales tax system for retail outlets, development of property tax, some work has already been done, development of agricultural income tax, and I'll just end on this one. You see, the definition of agricultural income is actually in the income tax ordinance. And there, whereas you and I would call rental income as income which should be taxed, rental income, if you rent out agricultural land, is treated as agricultural income. So in a sense, some of the income tax supposedly called agricultural can actually be tackled through this mechanism by reviewing or revisiting the income tax ordinance. I'll stop here. I'm happy to take details, but because there are 3 other people who will be speaking, and I'm sure there are much more than I. Thank you very much.
Thank you, Shahid. I think you've set the stage well. As you can see, the agenda and the policy and what we've got is very, very complicated. The question that I have for all of you, and I hope that we go further into it, how can we simplify it? So I think Ikram Sahab has done some work on this. Let's see what Dr. Ikram Sahab, who's well known. I mean, I don't know how he writes. He writes like 10 columns a day. It's an industry. It's an industry. But he does some very good work, keeps us informed. Ikram, for that I thank you. But please let me give the floor to you.
Thank you very much, Nadeem, and I am honored that this morning I can share some of my views with the learned participants and sharing a few ideas. That what I think is that we don't know where tax policy lies. We keep on talking about tax policy, but where is the tax policy? Where is the legal background or the legal framework that can give us an idea that how we should, when we say tax policy, is a very vague thing we are talking about. And we don't have any official documentation which is like trade policy sometime, or they have industrial policy now in the making, or labor policy, or many other policies. But never heard of that the state has ever thought of having a tax policy. At this point of time, I must remind all of you that Federal Board of Revenue is now established under an Act of Parliament, because 1924 Act, when Central Board of Revenue under British Raj was there, we scrapped that in 2007. But you will hardly find any mention of that. What is that law is all about? If you have established a revenue authority with the name of Federal Board of Revenue Act 2007, how many of us know what that law is? I was stunned that in September 2018 I was called by the then Finance Minister, and he asked me, we want to separate tax policy from tax operations. I said, it is already being done. The way, when I told him that Section 5 of Federal Board of Revenue Act says that there will be a policy board, and what will be the composition? Is it functional? I think not a single meeting took place till 2007. Then they suddenly came up with an idea that we should reconstitute a tax policy body or board or what committee, whatever. And they nominated some people, notified Dr. Nadeem is here, he can tell us. And as far as I have read, that only one meeting took place after the reconstruction of tax policy committee board or whatever we want to give to that. So this is the level of seriousness that we have towards fiscal consolidation, specifically after 18th Amendment. How you can have a centralized tax policy when provinces have more share, and if you don't collect or if your policies are faulty, ultimately they will be more suffering at the hand of Federal Board of Revenue. Where is their role in tax policy, tax machinery, tax collection? We are a federation, but nobody has realized that what should be the scenario after 18th Amendment, whether it will be a federalized structure or it will remain centralized structure. So this was a huge debate which never took place at any forum, except that we kept on writing about that how now you are saying that we will keep provinces outside this exercise. Because if Federal Board of Revenue, whatever policies we see through their annual finance bills, you can call them policies or measures or amendment in laws, so we, whatever is available in laws that reflect policy. Otherwise, you don't have any document to discuss what is tax policy. In that, they keep on changing that off and on, and so many amendments are made in a year that sometimes I wonder how much man hours are just wasted to read them and what the significance of that. As Nadeem told, that always the central point is numbers, that we have to achieve sometime as ambitious as 42% growth in tax revenues, which is the case this year, and from 5.5 trillion now to 5.2 and now leading to 4.7. So always this kind of debates we are indulging and not realizing. So a very relevant point that I want to raise here today is that this is a serious constitutional issue now. When we talk of inheritance tax, when we talk of wealth tax, when we talk of other progressive taxes, hardly anybody has adequately addressed this issue, that these have been now given to the provinces. And provinces already have a right to levy agricultural income tax, because entry 47 says taxes on income except agricultural income. And Constitution itself defines agricultural income will be the same meaning as defined in the income tax law. So if tomorrow they change definition of agricultural income, and we will find that the tax that provinces are getting, they will not get, although they are not interested in collecting agriculture income tax since 2000, and this is also a kind of myth in Pakistan that we don't have agriculture income tax. All the provinces in 2000 through ordinances levied that, and also in the beginning it was that old time per acre levy, but later on Punjab made it that you have to compute uh, agriculture income, and whichever is higher you should have to pay. And there are certain assumptions I can talk a lot about, but the constitutional violations they have committed while enacting those ordinances, deviating from the constitution, because constitution says that we should adopt the same definition of agriculture income that contains in the Income Tax Act. And this is very important, and I think much ignored area in Pakistan, that all of us always talk about taxation in isolation to constitution. My point is that now they have levied sale tax on goods on restaurants 5% in the last financing. And provinces says it is a service. How you can levy tax on that? So at the moment, without realizing, we are paying two taxes when we go to restaurant. One is federal 5% and provinces have different rates. So can you imagine a country where we are talking about tax policy, they even don't agree on an entry which says tax on goods is the right of central, federal government and of course National Assembly through money bill. But services, specifically after 18th Amendment, has been written except sale tax on services. But they are fighting over the concept whether restaurant what they produce is goods, because this is manufacturing, and when they sell goods, food is like goods for them. But classification under Custom Act, Chapter 98 and world over whatever my little knowledge of the world fiscal system is that it is taken as a service. So we should, as my first slide you can see, is very simple that we all know the basic, and I have taken it from OECD old study that you have broad-based low rate approach to taxation. If you want fiscal consolidation, it should always be growth friendly. We all don't have to educate each other about broad base, low rate, and reduce distortions, economic decisions, saving, investment, consumption. They should increase output and improve social welfare. All of us know about these basic principles of a tax policy, but unfortunately, we have diametrically opposite actions, as Nadeem mentioned, as Shahid has highlighted, and we keep on reminding them through our writing. But a serious debate now is required that when there is a clear judgment of Supreme Court of Pakistan that under the constitutional scheme, no parliament of Pakistan, whether it's federal or provincial, can even delegate the power of taxation to any executive authority. And in gross violation of this judgment, they keep on doing it. And I have highlighted some underlying portion, but in no case authority to levy tax for the federation is obviously also applicable to provincial assemblies, is to be delegated to the government or executive. Therefore, this was the argument of the council that you can delegate, and they said no, this is wrong and it has no force. And if you will, this operating part of the judgment, they say only framing rules or issuing notifications or for operational purposes to achieve some kind of uniformity. So in a country where we don't even follow the constitution and as enunciated by the apex code, which is their prerogative, and this gross violation, if it is going on, I haven't seen in any paper by IMF, World Bank, or any other agency, or I mean locally also, nobody is giving due consideration that after all, taxation and tax policy must conform to the constitutional principles. And constitution is luckily quite elaborate on this and leaves no ambiguity. We don't have a constitution in Pakistan which is not addressing these issues. But there's a little respect. We always criticize military dictators that they violated all kinds of norms of the constitution. But what happened after the decade of democracy? They wrote in 2009 in another judgment that we are stunned to see that in Pakistan, a very important legislation like income tax is first 1979 Ordinance by Jawla and then 2001 Ordinance by Musharraf. So after decade of democracy, we find no will on the part of the parliament even to review those laws. They are not even concerned about that. And this is shocking for me that if parliament is not participating in any kind of fiscal legislation, there is no debate. They don't even read Finance Act. They are incapable of even reading that. The kind of the language that we use in our tax laws, it is now almost outmoded in every country. So complex that I have a book with me, and sometimes if I have to read a section, I am flabbergasted that how an ordinary person will understand it when I, after doing a lot of professional studying of taxation, laws, drafting, and other things. They are very simple now. They give you even illustration, no room for any ambiguity. They are clear language, very simple one. And then there is an example, no room for, and here the level of litigation. If I tell you, you will all be surprised that in every other case we are in litigation. So as a tax advisor, I may be earning a lot of money out of this litigation, but on the state level, it's such a failure that we cannot make laws, and then courts keep on giving inconsistent decisions at High Court level. For example, Sindh High Court said that Workers' Welfare Fund is a tax. Lahore High Court said, no, it's not a tax. It is anything else but tax. Tax has a different connotation. And ultimately, after 3 years, this went to Supreme Court, and Supreme Court sided with Lahore High Court. Interestingly, the decision of Lahore High Court was by a single judge, and in Karachi it was a full bench, but view of a single judge at Lahore prevailed at the level of Supreme Court. So what kind of a state we have created where we have federal laws and we have role of like high courts? Why don't we have a national tax court where disputes should go and then the finally Supreme Court? What is the business of every provincial high court to interpret a law that ultimately has to affect the federal level and not the provincial level? So sometimes I wonder that even after 7 decades we haven't been able to understand that what should be the not only fiscal policy but also how we should manage it, because you can make any good policy, but how you will manage. So these three things we already mentioned, that there is an over emphasis on withholding tax, there is a heavy reliance of taxes and duties at import stage, there's a deemed value of at import stage, and then tax, sale, purchase, property, capital gains arising out of it. We are not leaving things, but without realizing, because time is short, but in third session where I have to be here again, I will tell you that even they lack legislative competence to tax capital gain on immovable property. It is a gross violation of Entry 50, which says federal government can levy capital value tax, not and this caution the narrative on immovable property. So no kind of tax on immovable property can be levied by federal government, and they have done it since 2012, and nobody has challenged it in any court of law. Because on the other hand, as I have told you, agriculture income taxes is with provinces. So capital gain out of property will be with the federal government. You have income taxation, but agriculture income taxation is with provinces. You have sale tax. Sale tax on goods is a federal subject, but sale tax on services is a provincial. What kind of fragmentation we are creating? Nobody has given serious thought to these, because unless we are clear on these fundamental things, we will not be in a position to make any good policy at a level where both federation and federating units can thrive and they have their areas known. So quickly, I will conclude that the prevailing system, we all know, is the main problem is it's unjust, it's outmoded, it's unproductive, with high taxes yielding low revenues, made worse by complex, time-consuming and costly operational procedures. Brief analysis of data since 1980 I have provided in a paper, and hopefully PIDE will publish it, because I have traced it right from 1948 to till today. And it's not available elsewhere, so I had to make a lot of effort through how to trace it as back as from 1948 till the last concluded financial year. And solutions are simple to my mind, that if you have to eliminate these problems, you will have to involve all the stakeholders. Till today, all tax reforms and their exercises was bureaucratic. Behind they have people from private sector, but they also behave like bureaucrats, sitting behind, not telling the stakeholders what they are thinking. And then suddenly the last one, tax reform commission, which was formed in 2014 or 15, but their final report came in somewhere February 2016, and it was marked confidential. So can you imagine that in a country where you first establish a tax reform commission and then you make its report confidential? So public don't know. I have copy, and if I share it with you, I will be violating some kind of confidentiality law of the state. So this is very strange. How we can make good policy without a proper public debate, without a proper parliamentary debate? So we have a long report, but it's not in the domain of public knowledge. It's shocking. And many a time I ask the chairman of Tax Reforms Commission that why don't you ask now this government to make it public, because it was done confidential by the last, and keep on writing about that, but nothing is coming out. And so quickly in 1 minute I will say that if you have to any good agenda of tax policy reform, then you must eliminate all these kind of presumptive minimum. Now, can you imagine that they are asking you that you compute your income as an importer, because we have already taken huge tax from you at the import stage, and even if you have suffered loss, you was able to sold all your goods, but that tax is minimum. So you have both. You have want to have both advantages. If my profit is more than what was that, but if it is less, then the tax deducted was minimum. And this is also gross violation of Supreme Court judgment, which I will quickly say that they told you when they in 1991 first time they imposed presumptive taxes. Matter went to Supreme Court and they said this is not use of entry 47, which is tax on income. It is in lieu of that, because Constitution also provides you can levy tax on income, or in lieu of income you can have presumptive taxation or capacity taxation, whatever you call that. But it is in lieu of, not in addition to. Now you have violated law that you are saying tax on income, as we understand, whatever the net income will be, but also minimum. So you have imposed not in lieu of, but in addition to. And this is also a very serious matter, which we need to discuss. In the end, I will only say that if Pakistan has to adopt a good policy, it should be through low rate, broad based, and with simplified procedures. Otherwise, we will land nowhere. The rates and whatever is, though we have given something in our study, but this is only suggestive. Only after complete debate, taking all pros and cons, numbers, and you want to, you can modify it. But it should be a low rate, and it should be harmonized sale tax on goods and services, because India has integrated it long time back. And we should also go and everywhere, because you can't divide goods and services and then bidding and federation and predating units always fighting over it. Companies rate is still, to my mind, very high, because the world average is around 20. Is again they have frozen it to 29. Custom, I want it to be very, very simplified, but single maybe rate, because multiplicity, SROs, tariff lines, and everything is creating a lot of trouble for us. So if they really want to go for any kind of complete and full compliance, which they should, then let us first of all have this 37 million according to last census household data of income, and then first of all we can always decide what kind of taxation we should have, how many peoples are liable to tax, and how many are liable to be included in a SAS program. So no such data is available till to time, and that is a big problem for us. And in the end, I will say that we should have to reconsider the constitutional scheme as well. To me, pre-partition scenario and in other countries, a federation like us is very clear that inclusive right of goods and services with the provinces, and federal government must have all kind of incomes, including agriculture. And if they have to need more taxes, then they can have exclusive tax within the name of, like in 2030, they have the income support levy to meet any kind of specific liability, like even that retirement sort of thing. But how they will levy it, to whom they will levy it, also need a lot of debate. With this, I will end, and I'm thankful to all of you.
Thank you very much, Ikram sir. As you can see, ladies and gentlemen, this is a very complex subject. Let me say here also that PIDE is trying to do a debate on doing development better, as Khalid Mahmood mentioned. We did a conference on PSTP 2 weeks ago, and you'll see the summary here. You will get it from outside. I think if you haven't already got it, we put a lens on PSTP and tried to come up with ideas on how We will do the same for taxes. The key problem that I find from both sides and in Trump's presentation is that there is really no debate on any subject in Pakistan. There's really no research happening. I remember telling the FPR on many occasions when I was the deputy chairman, for God's sakes, where is the research? Unfortunately, there's no research anywhere in the government. And that's a vacuum that we're trying to fill up by having conferences like this. So the key issue that, as far as I can see, is coming up is simplification. And ICRAM has done another paper for crime some time ago on very pointed out how simplification will help increase revenues. I urge all of us to look at that too, and ICRAM will also give us a copy of that so we can publish it. But now let's move ahead with our agenda. And we'll have Dr. Athar Maksud, a former PIDE member at Kardar, and now Professor at NAS. So Athar is a long-time tax policy guy, worked with the APR, etc. So I hope he'll shed some light on the subject too. Athar, over to you.
Thank you. Bismillahirrahmanirrahim. Let me start by putting forward two very simple points. We all agree that tax creates deadweight loss. And that deadweight loss, unless or until supply or demand curves are inelastic, perfectly inelastic, is a distortion in the system. So taxes create distortion. And the purpose of tax policy is to reduce and minimize those distortions. So we have to be very careful about this one. The second point that I would like to start with is that we should view tax revenue target as the byproduct of growth process. It should not be a target given the way it is given to us. If there is growth in the economy, there will be an automatic flow of resources in the shape of taxes. So let me now continue on what I have to say. And I will start by narrating two visits that we had from FBR people to NUSC over the last few years. In the very first visit, a very senior member of FBR next to the chairman came to NUSC. And as you would expect from a senior professional, a seasoned person, when the deliberation started, an aura of politeness and congeniality was there. All through the presentation as well as the question and answer session. And at the end of the event, souvenirs were distributed among the students, and I saw my students to share and use those souvenirs because some of them were flash drives like these with FBR written on them, and I'm still using it after about 3 years. So there is the utility of a visit. The second guest was a mid-career person from the field formation. After settling down on date and time of the event, suddenly we received a call, oh, wait a second, we have some other business to do. Can we postpone it, this event for some other day? Now, with other universities, probably the academic calendar is flexible enough to have these visits any time or of the day, but not at NUST. So we pursued, and ultimately he came and started his presentation. And during the presentation, he did not hesitate to mention that FBR team is in a process of raids on at least 4 economic entities for not adhering to point of sale requirements. During the tea session, which incidentally was short because the gentleman has to leave for leave to join the raiding party, he made a casual remark. And that remark was, we live in a country where people don't stop at traffic light unless there is a policeman posted there. To me, these two visits pretty much sum up the tax policy dilemma that Pakistan in general and FBR in particular is facing. There are two basic issues in my opinion. The first one is with regard to divergence in views among senior management and its operational staff in the field formations about tax policy matters. And this is a long time concern, it is not a short-term issue. While the senior management appears to subscribe either willingly or otherwise to changes, which are reforms, in the tax structure proposed by the government, the junior staff, especially those who are posted in the field, are invariably reluctant to take ownership of reforms. Resultantly, there is a continuous conflict on tax policy matters between those who administer and those who have to deliver. So my first take out of this is that ownership of reform is fundamental to improvement in the system. The second issue pertains to broad policy parameters of tax policy itself that actually has to be pursued. Once again, there is a general disagreement among the stakeholders. Many believe that a policy of congeniality and coordination be pursued where taxpayers are treated with respect. However, there is a strong group that believes taxpayers to be dishonest and adversaries. No wonder for them policy of annoyance and harassment becomes the order of the day. So my second take is that how should we view taxpayers? Equal and honest partners in growth or adversaries? Over the years, FBR has attempted both these policies. And independent researchers have analyzed the outcome of both. It is a pity that professional assessment has not received due recognition. As a result, we see ample evidence of disharmony and chaos and institutional decay that has seriously hampered economic growth and social well-being of the society. So my third take from this presentation is chaos is the result of less than fully agreed upon plan of action. Before proceeding further, let me understand that FBR, and let me state also, that FBR is an institution which has a clear objective. And that clear objective is to mobilize resources as per budgetary requirements. And tax policy and administration has to support the institution to fulfill this objective. As far as tax policy is concerned, over the past 60 years, we have seen varied experience. Most of us would know that from 1960s till 1980s, Pakistan Tax Authority relied heavily on custom duties and central excise duties now, which are called federal excise duties, as the two major sources of tax revenue, with nominal reliance on income and consumption taxes. 70% of taxes were generated from custom duties and at that time central excise duties. From administrative point of view, custom duties and central excise duties were easy to tax areas. Complete assessment of income tax returns with extremely high corporate rates reduced the breathing space of economic activities to a trickle. No wonder that complete supervision and high tax rates promoted a culture of collusion and tax fraud. The entire taxation was thoroughly corrupt. While the taxpayers were trying their best to evade and avoid taxes, the tax administrators were more than helpful in facilitating to achieve these objectives. The national exchequer was the clear loser. Most of the tax reform reports prepared during this time period bear testimony to what I have stated just now. Clearly, this situation was never sustainable. Thus, in late 1980s, the management in FDR decided to change the existing tax policy. Some may argue that it was a donor-driven agenda, but this is a debatable issue. The change of focus was quite startling to my view. It required that tax rates should be lowered to minimize tax evasion and allow market forces to work. There should be a switch from tax on production and investment to tax on consumption and income, which means that we should have GST in VAT mode, income tax, and we should reduce our reliance on custom duties and federal excise duties. Substantial rationalization and reduction of tariffs and complete elimination of para-tariffs were undertaken. Elaborate revision of corporate rates were done. Remember, the banking companies were taxed at a rate of 66% at that point in time. And private companies were taxed at a rate of 60%, and public companies were taxed at a rate of 55%. So there was a need to reduce these tax rates so that internationally investment becomes competitive. A system of complete assessment of tax returns was replaced by a system of universal self-assessment. Simultaneously, to undertake wide-ranging tax reforms, there were administrative reforms, such as simplification of tax laws and procedures, re-engineering of business processes, etc., so that the tax obligation becomes easier for taxpayers as well as for tax collectors. This remarkable change in tax policy initiative continued for 15 years, from 1987 till 2002. The outcome of this tax policy was FBR was able to collect taxes as per budgetary needs. In fact, it never missed the revenue targets during 2002 and 2007. Resultantly, economic management was smooth and there was no pressure from IFIs. The tax mix improved. The share of direct taxes increased from 18% to 40%. Reduced rates allowed commercial and corporate activities to flourish, thereby generating economic activity in the country and creating ample employment opportunities. Consequently, the per capita income in this country doubled within this time. Dr. Haque has mentioned about litigation burden. Let me explain that during this time period, 78,000 cases at the first appeal level, they were disposed of. Every other taxpayer was bound in the litigation burden. However, unfortunately, as things happen in Pakistan, this change was also short-lived. For one reason or the other, policy reversal started in 2006-07. And it has continued, unfortunately, till today. Tax rates are being revised upward along with imposition of regulatory duties. Harassment of taxpayers on one pretext or another has started. As a result, the economy has lost breathing space. The tax collection has also been affected very, very badly. So what should we do? We have two experiences. I support a policy of tax facilitation with reduced tax rates. I think the tax policy has become ad hoc, as we have not done the basic homework to understand who is to be taxed and how much. The first and foremost effort should be on identifying and correlating taxes with tax bases. Taxes and sectoral composition of GDP has to be matched to find out where are the tax gaps. I have found out over the years that there are sectors within this economy which are not taxed or very lightly taxed. This claim needs to be re-verified. Textile sector, in one of my studies, I found out that the entire textile sector is a negative contributor to tax. It receives subsidies in the shape of BMR or R&D, etc., and the amount of tax paid is less than the amount they receive in the shape of these benefits. So negative taxation is there, and textile is the largest industry in Pakistan. A peculiar tax structure also exists for the sugar industry. And I can go on and on. There are so many industries where the tax payment is very peculiar. And I will request the PIDE people to undertake these research activities. Corporate compliance is very low in this country, nearly 40%. So I ask, what is the health of corporate data set existing with the SECP? I think the SECP data needs to be revisited once again. The tax policy is very complex right now. And I don't ask anybody to go on all the fronts. Unfortunately, when we start doing things, we start with all the fronts. The best strategy is the 80-20 rule. 80% of our taxes come from only 20% of taxpayers. We should see who they are. We should facilitate them. We should encourage them. The remaining 80% of the filers or the taxpayers, they contribute only 20% of taxes. So we should start facilitating those who are contributing to this, to tax revenues. Another concern, which I think Nadeem would agree, that we have a very, very poor state of data available from FBS, Federal Bureau of Statistics, and especially with regard to the manufacturing data. We don't know how many units are working in Pakistan, and still we are producing data on manufacturing, the value added in manufacturing sector. And remember that 60 to 65% of taxes originate from the manufacturing sector. And if we don't know the base, how can we say that our 60 to 65% of taxes are adequate enough? So let us revisit what is being produced by FBS on the manufacturing data, basically. We all talk about that FBR has withheld refunds. I did some study earlier on when I was young. I am old now, so I don't do studies. When I was young, I did that study and I calculated the pendency of those refunds. And I found out that most of the refunds were within the prescribed limit of the law, 90 days. Only a small segment of the refunds was there which had a pendency of more than 90 days. And in many of those cases, the problem was with the taxpayers. They were not able to provide the adequate receipts of their claims. So we make lots of statements against an institution. It is also important that we should see how the other party is doing. I am so interested that the taxpayer should not be harassed, but at the same time, I have some sympathy for the organization also. So I stop here.
Thank you, Pasha. Thank you. I think you raised again the fundamental point that I have. This country makes policy on the basis of assumption. There's no research, no thought anywhere. And that's where PIDE comes in. But PIDE has no fund, so in any case, PIDE is done. So unfortunately, we have no research anywhere in the country. So people can do whatever they like, and that's fine. That's very good. But this is wonderful. Since this is a very good basis for discussion, that we moved towards a good situation, we moved backwards, and we have lots of data and analytical issues that we need to think about. So let's go to our next speaker, who I think will clarify all these questions, because he's from the FBR, and he should be able to, Dr. Nadeem, member of policy. I think Hafiz, you've raised because I have lots of questions to you. And tell us, why is it that you can't simplify policy? Why shouldn't we have a simple policy? Thank you.
Thank you, Dr. Nadeem. Esteemed speakers here, Kardar Sahab, my teacher, Dr. Haque, and Professor Maksud Sahab. There are very relevant issues on which the talks have been structured. I represent the bad guys here. Until now, it must be very clear that we are. But I'll try to dispel this impression. Our policy, the tax policy, is not that directionless. Although we are a country where we should accept that there is crony capitalism and elite capture of these policies, and the policies ultimately that come to you are not the policies that FBR professionals originally designed. But nevertheless, there is a direction which I'll try to tell you. So, and there has been allegations that there is no research on taxes, so we do some research. It would be a bit sketchy, but nevertheless there is research. So on day before yesterday, the Ministry of Finance has presented a medium-term budgetary framework in the National Assembly. It is available with the National Assembly and contains about 3 pages on the tax policy. So it is not something which is with us. It is announced policy of over medium term of 3 years, what we want to do and where we are standing. So now, and on research side, I think if you search web on Pakistan, there were 6 or 7 very I will say 70 pages or more papers were written in 2012 after the conclusion of the TARIFFS program of World Bank. These were good studies. Georgia State University was also involved. Martinez and Quist wrote a lot on it, and Ryder and Sharafsian have written a lot on tax gaps and tax policies and everything. There are about 6 papers available on the web. And recently, last year when we started this budget exercise, we made sure that with the help of World Bank, we did some gap analysis, as well as we also did some tax-based problems. We had a lot of research from Mark Ryder, from Sharafsian, and some from LUMS also. So we do base our decisions on some sort of research, It may not be an ideal research, and we obviously need support from institutions like PIDE or NAST or NUMS and other, because there is a gap between academia and the practitioners which need to be fulfilled, and this workshop seems to be a very good beginning point for that. So I'll focus or try to structure my talk into on 4 issues. One will be the tax policy scene in Pakistan right now. The second point will be what we have done in the last year's budget and what was our direction, what positive things we have done. We must have done a lot of negative things, but there are some positives. And the third thing will be some talk about the contentious tax issues as already pointed out by academicians regarding wealth tax and gift tax, inheritance tax, tax rate, etc. And then in the end, I'd like to tell you the 7 principles that we are following for tax policy the way forward. So number 1 is tax scene in Pakistan. From a tax practitioner's point of view, I'll say that our tax expenditure, which is the cost of tax exemptions that we have granted in the statute, etc., is very high. In last year's economic survey, we reported at around 1 trillion. But now, when we are going to publish a tax expenditure report, hopefully this will be coming very soon in 2 months' time, our expenditure estimates are going at 1.5 trillion, which is a fair amount of money. At 1.5 trillion exemptions have been provided in the tax laws, the GST, the income tax, and other statutes. This is the tax base which is not taxed. In the tax expenditure report that we are going to publish and present it to the National Assembly, will also identify that who are the sectors or business groups or people who have been enjoying this sort of tax cuts or tax expenditure. Much of it might be a very common practice amongst the countries of this region, but there are many exemptions which are very atypical and represent some sort of elite capture, crony capitalism, or simple ad hocism in tax policies, that somebody is feeling bad about taxes, he's powerful, he might be very sincere, and he comes in and gets the policy changed. It solves this problem, but it creates many more problems for the tax administration. So that is one point, that we have got a very tax high expenditure which erodes our tax base and our capacity to collect taxes. IPP might be one example, and there are many more which will IPPs. I think this electricity generation and is about 1% of GDP or slightly less than 1% of GDP, but it has been exempted from tax for 30 years, 40 years. This is the sort of exemptions that we have provided. And there are, I day in and day out receive multiple sort of everything, the Board of Investment, every division of this federal government as well as provincial government, they ask for tax exemptions. We want to develop this sector, we need to give tax exemptions. So this has been order of the day for the last so many years, so many decades, that government somehow thinks it easier to give tax cuts rather than to collect tax and give a cash subsidy to the deserving whatever. If you want to promote an industry, the better way might be, this is only my personal opinion, this is not something of FPR's official point of view, but I think if we have to give some money or some facilitation to a certain sector, we should collect full amount of tax and then subsidize that sector, because it's very difficult to give a supplementary grant by finance, but it is very easy to give tax exemption of 40 years or 30 years or 50 years to anybody, because it doesn't apparently it doesn't cost so much, but actually any tax exemption that you give is equivalent to the money you spent on something. Actually, it is even worse because it is not estimatable. Cannot be calculated in accurate sense. But whenever you give something, it can be calculated. So I think that this practice of giving exemptions to everybody and anybody who wants to do something good for this country is probably not a very good option for a country like this. Our tax laws have been sort of overworked. We want to collect taxes through them, we want to promote philanthropy through them, we want to achieve social objectives through them, we want to promote investment through them. There is, by the way, hardly any evidence that says, especially in the Pakistan scenario, the research that I have done, that the tax exemption actually results in different investment decision than a person who is not getting tax exemption. We did some study on sugar mills from 1999 to 2004. There were 34 sugar mills who were enjoying exemptions, and then there were other 30 who were not enjoying any exemption. And in both the investment decisions, the dividend decisions, the capital machine decisions, the production decisions, everything was the same. So we should rethink about this, that maybe if we are at 17% tax GDP ratio, we can afford giving tax cuts, tax exemptions to different sectors. We have a long list of philanthropic organizations in clause 61 and 66 of second schedule of the income tax ordinance, in which we say that these are good non-profit organizations. They should never be audited, not to be taxed, never be looked into, and any donation given to them should never be asked, and it should be state deduction from the income. So we need to rethink about these things, because at 10% of FDR GDP ratio, which has gone down from 11.6 in 2017-18 to 10% in 2018-19, this is a point where we should stop and think what we are doing. Because whatever we were doing, the collection in nominal terms for the first time went down from 3842 to 3829 last year, which means that we have exhausted the policy and enforcement options that FBR was doing from last 20 years, and we need to stop and rethink what needs to be done in the future to increase this tax to GDP ratio. The other thing is the distortions that we have created in our tax laws, maybe for short-term ad hocism, as already pointed out by, I fully agree with the esteemed speakers here, that the distortions like in income tax, we have relied on, not withholding might not be a very bad thing, although we have agreed with World Bank that will be reducing the number of withholding taxes from 68 to 20 in 3 years' time, and we are doing that. But withholding is a pay as you earn sort of concept. The real problem is this minimum or the presumptive sort of taxation that we have attached with it. We need to get out of it. We need to get rid of the minimum taxes. We need to get rid of the distortions that we have created, that commercial importer will pay 6% tax on imports of machinery, and the manufacturer will not pay any tax. In fact, the machine imported by a commercial importer is not eaten up or not melted. It is used by the small and medium manufacturing sector, which ultimately puts into some sort of manufacturing activity. So we, through our policies, might be and surely be distorting the economic incentives as well as economic choices of the agents out there, economic agents out there. So these distortions in sale tax, we had multiple special regime, some special regime for steel people who ought to pay a tax of 5,500 rupees per ton, regardless of DVAT, regardless of price variations. It was a fixed tax. so it was creating distortions. There were multiple SROs and other things. So the distortions are there. Unluckily, with every distortion, there's a money bill or a money check associated. So if I want to do something about the import withholding, there is a 153 billion rupees attached to it. I need to find other sources in order to phase it out. If I want to do away with the capital machinery sales tax, which is a liquidity cost on the taxpayer as the machinery, when it comes in, goes into production 3 to 4 years time, and the persons have to pay upfront tax. Again, 120 billion attached to it. I need to find other sources in order to phase it out. So the issue is that distortions are so deep-rooted, and there is huge amount of money attached to it. And so even if I want to, I'm convinced that they should be thrown out of the statutes, but still the revenue considerations somehow compel me to phase them out, but not I cannot do away with them in a year's time. Then the third issue is the federal provincial issues. We are especially after the 18th Amendment and the latest NSC award, are suffering from this fragmented tax base, which is increasing cost of compliance. I was talking to Nestle people. Their tax people they employed about 10 persons in tax office, and now they have to keep 50 because they want now deal with 4 other tax collecting agencies. So we need to do something about it. This fragmentation of tax base, it is increasing the cost of compliance. There are multiple issues attached with it and multiple solutions. I'll talk about them later. There are 4 or 5 options that we are considering, starting from the very difficult constitutional changes to a much milder harmonization effort. And apart from the high compliance cost and high-headedness of the tax officers and audits or otherwise that we admit, and we are doing something about it, there is also the issue of this low compliance. So this region has been probably has remained in maybe it is a legacy of colonial times. People have some adversarial relationship with, if not with government, but surely with tax collection agencies. So people tend to avoid paying taxes. I think this is universal. Nobody wants to pay taxes, and the classical study of Sandmo and Ellingham back in the 70s says that tax compliance is only a function of 2 things: the probability of being caught and the amount of penalty that you suffer because of being caught. It may be a very, very distorted sort of view, but my practice of tax for 25, 30 years tells me that this is a very big factor apart from the tax facilitation effort. So you know that about 19-18% of GDP is agriculture. My agricultural income definition covers about 10%, that a crop part of it is covered, but we can tax the 8 or 9 or 10% of livestock, but unfortunately most of the livestock remains in the unorganized sectors, and there are some definitional issues that cattle who are farm raised cannot, they are part of agricultural income, and the organized dairy sector can only be taxed. And again, we face problems here. So 19% of tax GDP, the GDP part goes out. Then about 50 to 60% of services is a huge problem because it remains untaxed because of specific nature. We are only given 0.68 rupees for collection of taxes, and for these difficult sectors, we need to increase the cost of collection. In Germany, they spend 6 euros to collect 100 euros. So, and let me tell you, out of 0.68, the inland revenue only gets 0.3 something, and it's largely the salary part. But With the help of World Bank in the next 4 years, we are getting some budgetary support, and we hope that we'll address this issue. But again, in services, if you look at the wholesale and retail trade, it is 18% of GDP. Tax contribution last year was 6 billion only, and you know through newspapers that what are the problems that we are facing with traders and with chain stores and with other people. My ex-factory price of a certain product which appear in my returns is 50 rupees, and the trader says that I bought it at 98 rupees and sold it at 100 rupees, so he owns only 1 to 2% of the value chain, and the 48% of value chain is not on our records. So this is a huge problem. To address it, we introduced the CNIC issue, which obviously in the very start went to this flying CNIC, but from this month we have introduced a verification mechanism. We are doing verification of every CNIC through NADRA. So hopefully this will not escalate into a bigger problem. Similarly, the other sectors, the manufacturing sector, the formal manufacturing sector is our main tax collecting agent. I will not say that they are taxpayers, because they collect tax on behalf of many people. So they might claim that we the 16% of GDP we collect pay about 60% of your taxes, but in fact they are collecting taxes on our behalf rather than paying it through from their own pockets. So this is the sale tax, which ultimately goes to the from out of the pockets of consumers and not paid by the. Although the volume impact of sale tax is there, we know that, and we are conscious about the elasticities of goods, but mostly they are collecting agents. And so tax incidents, obviously, as the theory suggests, is passed on to the weaker or the not so powerful people in the value chain. So although we have all sympathy with these large taxpayers, but they also will be overstating that they pay more taxes rather than I think they collect taxes on behalf of others. The PTCL or the mobile companies last year or previous to last year in 2018 paid about 54 billion in taxes, which was deducted from general public. And before Supreme Court, we had to disclose that about more than one half was adjusted in tax returns, but half of it was never claimed in returns. So we might be collecting taxes from the very poor segment or lower segment of society who are not otherwise required to pay taxes. So the tax scheme, the base of collection is very, very broad as opposed to the common idea that it is a very narrow tax base. The incidence of tax is passed on. Our collection points might be few, but the tax base is very, very broad in that sense, and we admit that we might be taxing people who we should not be taxing, and we are getting much lower taxes from people from whom we should be taxing. So what we have done in the last budgetary exercise, we have reduced tax expenditure by 500 billion. So we were in the fund program. We had two options, either to increase rates or to cut expenditure, tax expenditure. And when we went for the second, although we made some rate changes, the sugar rate was increased, the cement rate was increased. There were slight changes in other rates. The salary rate, which was cut by the outgoing government, was partially restored. But other than that, it was the base changes. We went for this BMR credit abolition, which might be wrong in view of many of you, but it was costing us a lot. 85 billion was its cost. Similarly, the cost of giving zero rating to this textile sector, it's now a $20 billion industry. 8 billion local sale, 12 billion export. So the $8 billion industry in Pakistan was paying only 4 billion rupees. So it was a pittance. So we had to move from no tax, no refund policy to a full tax, full refund policy. We know that there are problems, teething problems with the people are suffering, but nevertheless we have issued huge amount of refunds right now, about 120 billion in refunds which have never been issued in past. So hopefully the research said that it is costing us about 300 billion. We don't believe that number. It was a study conducted by Michel Sian, but our estimates were we are losing 120 billion because of this zero rating. And the numbers till now that we've gathered, the taxes that we've received are also supporting our contention. So then the second thing with that the powers available with federal government and the Federal Board of Revenue to alter any tax rate or give exemption or to make any changes was sent back to the National Assembly. So we don't now have any power in FBR. Even the federal government's powers are limited to very few emergency sort of things. So we have sent back these powers where they belong. So no taxation without representation. So they have gone back to the National Assembly. The third thing, all special regimes were abolished. No special regime of sale tax now exists. Steel and everything other than the issue of IPPs where we were bound by the sovereign agreements, all special regime, we had a full chapter of special rules, special procedure rules. We have abolished it and moved to a broad-based VAT system. So all SROs, especially in the sales tax and in the inland revenues, have been abolished. We have gone for huge facilitation effort. You must have seen our Tax Asan app. You can file your return on it. It's a pictorial app, and in 5 to 10 minutes you can file your return if you are a simple income earner. And we have also launched a page, FBR Malumat, where everything that you have, every transaction that is in our notice has been upfront given to the taxpayers. That look, we don't want to catch you, just file your returns according to the information that we have. So huge efforts were made over there. In harmonization, it's a long topic. Hopefully, maybe at some other time I'll tell you that the provinces and federation are sitting together. We had 3 meetings, and hopefully in this year Finance Acts of all provincial governments will see that will move to a single rate for a single particular service, a single treatment of single service, a single portal where the taxpayer will file only one return and could be divided by IT in 4 provinces plus federation. So a lot of headway has been made in that, and we hope that by next year we might be moving to a single audit. Committee is working in the Ministry of Finance, where all provincial governments are represented and FBR is represented. We enhanced the capital gains period from the partly 3 years to 8 years now. We have introduced progressivity in capital gains, in property incomes, in interest income, in dividend incomes, and the concept of non-filer, which was pointed out, has been abolished. It is now a punishable thing. It was a punishable thing, but wherever the word non-filer is occurring in our law has been removed, so we do not accept it as an entity. Now there have been additional burdens on taxes on people who are not registered with us. So a lot of things have been done, and many more will be coming up. I'll leave the contentious issues. Wealth tax, probably the Federation is now not in a position to impose a wealth tax because of the immovable property taxation, which has been shifted to the provinces in 18th Amendment. Inheritance tax is a difficult sort of subject because of the Islamic Ideology Council observations on it. it would be difficult in this politico-religious scenario to introduce inheritance tax. The tax rates in India, if you look at 1200,000 person earning 1200,000, which is 1 lakh per month, pays a tax of 30,000 only. Where when I compare it with India, it is 200,000, although the rupee is much more stronger. Bangladesh also 2,000. So our tax rates are lower, especially on individuals. On corporate also, the effective tax rate after all these accelerated depreciation and various credits that we provide to them is on average 18, 19, 20%, barely above, and sometimes it goes as down as 5% to 10%. So we can comment on corporate and other rates when we somehow control the exemptions and credits we allow to them. And then the way forward is that we are now somehow convinced that number one, tax laws should only be used for the tax purposes. For the short term, we should not use them as incentives. And incentives should come from infrastructure and other things. The second tenet which is the following are the income tax should be a real income based progressive tax, and it should not be minimum tax protected or a distortionary presumptive tax. We are moving away from those taxes. It's a legacy since 90s. So we are slowly but surely moving away from that concept. The third thing is that we are moving towards a broad-based VAT with single rate with minimum exemption, which should be the unprocessed food and the education-related expenses and health-related expenses. These three should be the things that we should avoid taxing. But other than that, everything should be taxed at full rate, no special regime. This is our VAT policy. On custom side, we want to have minimum or no taxation on capital goods, on raw materials, on intermediate goods. There might be some taxation, or even if we have to tax something, it should be the finished goods which are coming from outside. But again, the customs as a source of revenue should go out, and we should rely more on the domestic taxes. And then we are following a policy of tax facilitation in which we want to, as already has been said, that we collect a byproduct of business surpluses. So when the businesses will grow, our taxes will flow in. So we need to minimize the time and the money that the taxpayers spend on tax compliance. This is another objective on which we are spending about $70 million that we've received from the World Bank on automation, on simplification of things. We have translated our return into Urdu. Our app is also in Urdu, and we are trying to facilitate taxpayers, and we are in future aiming for a gateless and a faceless tax office in which the people don't have to go to our field offices and somehow negotiate their taxes. So I'll stop over here. Thank you very much for inviting me.
Thank you, Hamza. Dr. Hamid has done a very good job, very good defense of the FDR. I just want to make 2 or 3 comments here. One is, please look at your brochure. Our team, Mahmoud Khalid, Nasir Sahib has done a great job preparing this brochure. The reason I'm pointing this out to you is all the objectives of the session on this today, all the questions of today, it's up to you to decide whether the panelists have addressed the objectives, questions or not, and now we have about half an hour for you to take up the questions. But if I just make 2 short comments, we take a round of questions and the panelists will answer them. I think I'm heartened by the fact that we discovered that the 4% of GDP as tax expenditures. So yes, we should increase our tax GDP figures by 4%. The tax to GDP ratio figure no longer is, I think the IMF staff report said it's about 12 or 13%, then 17%. So let's be clear on that. Second thing, what Shahid said is very interesting, that we got this withholding taxes that are nuisance taxes. And I'm glad to hear from Hamid Sahib that they are thinking of reducing them. I hope it happens quickly in my lifetime, because I've heard things being reduced for a long time in my lifetime. Never happened. And the final thing I'd say is that I'm very happy to hear from Hamid Sahib that they've got research, that they've outsourced the research to the World Bank, Musharraf Sayan, and people outside the country. When I meant research, I meant research locally, because nobody can make progress by outsourcing research. In this country, we've done that for too long. We outsource research to others, and then when they come back with a product that is really not good, we can't say anything, there's no accountability, nothing. So we've had these TARIFFS studies last time, which were, their own president said we use this. So when Hamid Sahib, I urge you to develop a tax research department in the we are happy to assist you in that and we have less reliance on donors, because I think quite frankly we need to do some work of our own. We can't outsource something. But with that, I'll open up the floor. Please, questions, half an hour, go. Last 5 minutes we'll give to the speakers. Anybody need hands up? Go ahead.
Thank you. I am Talat Anwar, former professor PIDE, School of Public Policy. And I have a question for Dr. Ikram, who recommended that, provinces should be allowed to, should have a right to tax to goods and services. And, we already have a problem of overlapping jurisdiction, because some faces problem because they have to pay corporate taxes, and they are also corporate taxes to the FDR, and they are also liable to pay taxes, on goods, GST on goods and GST on services. That's the overlapping jurisdiction problem. My second question is from Dr. Hamid, who is about the exemption. He is not happy about the exemption, but what is your view about the exemption given on CPAC? In particular, Gawazar Court has given, 40 years exemption on goods and services, 30, 40 years, I don't know the period. And we have to develop the SEZ, and we have to give exemption. And unless we give exemption, we won't be able to develop SEZ. Thank you.
But I don't have to say, who am I? I'm old and don't do research anymore. But the whole business of this conference is about research and about thinking indigenously, locally. TARP was mentioned and some 40 studies, but the TARP was a miserable failure. That means those studies did not inform tax policy. We have TARP 2 now, and the representative of the FDR has said that they are going to do that again. I can assure him the result will be the same. So watch out. That is number one. Secondly, Ikram made a very interesting suggestion. I think it's about time that we clearly settle this jurisdictional issue. He said income tax, including agricultural income tax, should be with the federal government. And GST as a whole should be with the provinces. That is what he said. I just want to add that there is another level of government which has been ignored, and that should be given property tax exclusively so that it can provide for public services. Now, this kind of arrangement is necessary, but it also means that you have to reorganize the whole system. Federal government, in my calculations, can live on income tax and customs. So let's make it simple, only two taxes. Provinces can live on GST, and the local government can live on property tax. Abolish all others, and if possible, abolish also FDR, because when something doesn't run, you don't want to force it to run. And think creatively about some new organizational setup. I think that's about it. I have another. That's it. Thank you.
Thank you very much. My name is Suleiman and I am former member customs. I've been back twice. There is one thing that I have faced since I myself became a consultant after my retirement many years back. That two things, it is very difficult for anybody who wants to do research, and everybody is talking about doing research, is you can't find statistics because FDR will never give you statistics. You ask them and they point blank refuse, or they will give some excuse for delaying it, and by the time you get it, your work is over or your contract is over. So that is one thing. Why are statistics so precious that they are kept secret by FDR and even by the statistics division? In the statistics division, you do get results, and if you try hard enough, but it takes time, and it's so difficult to get any material out of them. If you have some context, maybe some people seem to get it very easily. I don't know. Why are these kept secret, especially by FDR? Yes. Second thing that everybody talks about is the direct taxes and indirect taxes, and it is assumed that customs is the only indirect tax apparently, because that's how the discussion comes up, and that also at import stage. Everybody talks of import stage. There are so many taxes on import stage, and then the direct taxes is the IR department. What people don't know is that the major portion of taxes collected by IR are indirect, which is sales tax and federal excise. And I don't want to go into the details of that, but how successful that experiment has been, that very few people discuss, probably for obvious reasons, that it's not a very, a subject which is liked by many people. And I would suggest that there should be some discussion on this also. And then, somebody mentioned, I think you also mentioned, and some other people also mentioned, the word filer and non-filer. Now we are informed by Dr. here that the word non-filer probably as an entity has been removed from the law. But what about the non-taxpayers? Because this thing
removed. Sorry, I didn't want to interrupt. You look at Schedule 10. You may remove the word content non-filer, but Schedule 10 still makes that distinction.
And that differentiation, that filer pays 0.1% and non-filer pays 0.3% or whatever, that still exists. But nobody calls the non-filers as non-taxpayers. There may be some complications because, for example, I have a phone and so does everybody, including the servant working for me. He probably has 2 or 3 SIMs at a time. I have one, but he has 3. So they pay taxes also, and there is income tax involved in that also, as withholding income tax. So this question should also be debated. I hope this is debated in the session that comes later. I don't know whether it is part of the discussion, but it should be debated. Thank you.
I remember, I don't know what the numbers are, until the last time I looked into this, just that aspect, the largest collector of income tax was the Collector Customs Karachi. Now, I don't know what the ratio is now.
It's about 40%. It has dropped from last year's 50% to 40% this year.
Sir, my question is, as we are discussing tax reforms, but this government seems indifferent. For instance, they are not bothered to appoint any chairman. Justice. They are not bothered to appoint any permanent chairman every year. And on the other side, in the presence of respected Ikram Sahib, this is very easy in Pakistan that there are 1.4 trillion are stuck up in litigation, 1.2 or 1.4. And it's very easy to get stay order from Islamabad High Court and Sindh High Court. It's very easy. And against the instructions of the Supreme Court of Pakistan, that the lower judiciary cannot grant extension more than 6 months. But they are stuck up the cases more than 5 years. So what is the solution of? We'll take that up into the It will never happen.
Okay, so me? Okay, it's slightly different. Whenever a new government comes, like the present government or maybe the previous government, they set up an economic advisory council. And, you know, they meet with a lot of pomp and show, and there are some members of the economic advisory council here. And they ask them, okay, you know, did you come out some out-of-box solution? They say, oh, there are too many mobile phones coming in. We never hear anything substantial from that group, and maybe we could hear because some of them are represented here.
They are always the same. अभी पीछे से कौन करना जी? आगे आगे बोले.
Let me also try and explain the concept. No, I'm not a member. But the concept is a very simple one. Have them inside the tent so that they can't complain or criticize. The concept has always been this of the government.
Sir, my name is Nadeem and I am the chairman tax committee from the Chamber of Commerce and Industry. Sir, we are having very serious concerns not based on the business community that government is after the tax collection and somehow or other due to their own reasons they are unable to collect the taxation by the less import or some other means, whatever. Because it's a tax collection chain. When you import a good, ultimately you go for the sale tax and then income tax, and then at the next stage when you sell the good, you pay the taxes. Now what the custom is doing, there is a department in custom which is called PCA, Post Clearance Audit. They are issuing retrospective notices to the taxpayers for bringing in the documents which they feel that they have cleared the goods and the goods which they have cleared are not according to the price which it was prevailing in the time of import. Rather, according to the custom law, GD under section 29 of the custom law is the final tax document. And they are also asking to bring all the documents which are related to the IRS, particularly income tax and state tax. So I want to say that there is a big chaos, and at this point of time we have been receiving a lot of complaints. As I am doing the shows on tax and other affairs also on different TV channels. So it is the CLT concern. I went to Karachi to meet the post-clearance audit DG as well. So it is a big issue that due to less import and due to increase in duties and then this retrospective notices from the PCA to the business community, and they should restrict only up to the custom duties, or they are entitled to collect the taxes do the audit of the income and sales tax also. And one thing more I want to get clarified from the Dr. Sahib there, the tax policy, that can they audit the income tax, the sales tax as well, and is the GD under section 29 of the Tax Amendment, Dr. Mansoor is here, can tell us very clearly, is again, it is not a final document as by the ruling by the different courts. So we are, to the people are in a very bad shape, and at this point of time we need your help. Thank you.
I am Wajid Bukhari from State Sector. Sir, my question to Honorable Service Sahib is that we are listening, seeing in the newspaper reports that government is all set to give a lot of subsidy to a steel mill for a foreign investment, but the local industry is a major chunk of the industry is against it. So, what is your take on it?
यार ये तो सवाल जरा टैक्स पॉलिसी के साथ रिलेटेड नहीं है, खैर कोई बात नहीं, आगे चलेंगे कोई और। Anybody else? Yep. जी सर। I hope you're not another industry law.
I'm Muhammad Ejaz and I'm partner with Dr. Ikram, who's also my mentor. My question is that for the last so many years we've been following a top-down approach. We make a policy and try to thrust it down, whereas it has to be a bottom-up approach. So we have not yet experimented on that. And the other thing is that we come up with a holistic view, like we are going to implement the policies or whatever the changes are to the whole of Pakistan, rather than selecting some areas like you do have 10 metropolis that will constitute roughly like 60 to 80% of your GDP. So why don't you pilot project these reforms on some of the areas like Karachi, Lahore, and then with success story move to other areas and holistically apply that to Pakistan. So this is the big issue that we come up and we say, okay, everything that has been done in past is now finished, full stop, start from new and apply everything to the whole of Pakistan. So it will always be a failure. It will never be a success until and unless you go for a pilot project. The second thing is that we don't have the corporate intelligence units and data mining units. Unless and until you have three things: corporate intelligence units, the data mining units, and the forensic investigation units, you won't be able to get the right figures and you won't be able to plan properly. So what we are doing about that?
Excellent, excellent. I think you got Jalaji, last question.
Thank you, Nadeem, for giving me the floor.
Ex-PIDE members.
Yes, I worked for PIDE. My name is Islamabad Babar. I worked for PIDE from 1975 till 1991, and then I migrated to the Senate of Pakistan. I have forgotten all my economics. I consider myself as a generalist, and I've noted down a few points which I want to lay before you. First of all, this constitutional and jurisdictional issue, everybody has talked about it. I think Dr. Haque and Dr. Nadeem need to sit together and decide this once and for all. Because somebody someday will go to the Supreme Court of Pakistan and then there will be a big embarrassment for the government. Secondly, I want to point out one good thing that has happened. The rupees 40,000 price bond has been demonetized. And in its place, a rupees 40,000 premium price bond has been issued, which is documented in the purchaser's name, and it goes towards tax documentation, everything else. I would suggest that all the other bonds should also be demonetized and premium bonds should be issued. At least they are documented. And I think a lot of wealth is hidden in these price bonds. They are lying in the lockers of these banks or at your homes, and you don't know the worth of these. I think the government must come out with a figure for the rupees 40,000 bonds that have been demonetized. Thirdly, I would suggest that we demonetize the rupees 5,000 note. Dr. Shahid Kardar has refuted. I am against it. I have tweeted about it quite a few times. It is inflationary and it discourages bank transactions. You can carry ₹1 million in your pocket without being noticed. Thirdly, I think I'll leave one point to the last session. Next, I want to talk about export subsidy on sugar. We are a water-scarce country, and we are growing sugar cane. Then we are producing sugar which is beyond our requirement. And when we want to export it, we need to give it a subsidy. Why should that happen? Why should we grow sugarcane? I'm not discussing agriculture here, but I'm just pointing out why should we grow sugarcane? Why should we subsidize sugar? Let us not subsidize it. There, a few mills will close down, but at least we'll reach an optimal solution. And finally, sir, I'm paying withholding tax on school fee. Are we encouraging education or discouraging it? Thank you very much.
Let me make a quick comment. It appears that the main problem is the expenditure and current expenditure. The next seminar should be on current expenditure.
Okay, good. So we've got enough questions here. I'm still not happy with you answer all the questions that we have here. But that's beside the point. Shahid, would you like to take the lead on answering?
Most of the comments, just more Muhammad sir. I mean, I tend to agree with you, regarding, in fact, I'm the only, I hate to talk about my past. I'm the only governor who refused to sign the 5,000 rupee note. And I said, there is no way that this should be continued. In fact, I had argued at that time there should be no fresh issues. And I'm talking about the year 2010. It's a stock of value, a lot of it is actually lying in Afghanistan. And of course, I agree with you, there are other bonds, 20,000 rupee price bonds and so on that we should discontinue. Property tax, I tend to agree with you, we believe it needs to be developed, no question. And this whole question, it should be local government. At the moment, maybe, no, of course not. It can't be federal government anyway. I mean, even today it's provincial. It's just that the provincial government. No, I'm not disagreeing. All I'm saying is at the moment, the tax policy on the property tax is developed by the provincial government. And hence, of course, they give all kinds of exemptions and so on and so forth. So ideally, it should be locally based. At the moment, what is happening is that a lot of areas get subsidized and a variety of reasons. I could go on for a long time on property tax in areas, something that I had actually changed the property tax law in Punjab where I was there. And the tragedy is that one gentleman who later became the judge of the Supreme Court, believe it or not, in one hearing, went ahead with an ex-party decision because 5 of his properties were being affected. That's the legal side to the judiciary. That's a fact of that. The import tariff regime is an area where, I know, because that repeatedly comes up. And that's something that I think is an area we need to address. I've become a convert over the years. I used to believe that there should be a one chapter, one rate. And over the years now. And this whole business of raw material versus intermediary good, I often wonder, one man's raw material is another man's intermediate good. So it's not that. It's very easy to say, well, we should have raw materials being taxed at that rate, intermediate goods at that rate, final goods at that rate. Unfortunately, it's not that simple. Anyway, I'll stop here.
The fundamental question that has been raised, and I'm happy that they have also emphasized that after 18th Amendment, nobody has really pondered that all so-called progressive taxes which we inherited from British India time are not now with provinces. So blaming Federal Code of Revenue alone and not taking into debate the irresponsible attitude of all the provinces, relying heavily on the visible pool and not collecting taxes which are due. As I mentioned, agriculture income tax. You will be astonished that many of my clients, they ask me to, this is my net agriculture income and I want to pay. And when we went to Revenue Board, they said we will not take this money. So why you are not taking this money? They said we have ordered from DC Bahadar that politicians of the province, they don't want that this should be proper net agriculture income taxation. We should keep on with these securities. So when that is the issue of the federal government, and you have this very difficult position that, as he has very rightly mentioned, that unless now we rethink this entire scenario, and the high-handedness on the part of very beginning from Pakistan was that in 1948 they took sale tax only as a temporary measure because the new state was running short of funds, and it was promised to be given back, as was the position under 100 article of Indian Act. In totality, what Balochistan is getting out of goods tax, only 9%, whereas they have reservoirs of gas, and Khyber Pakhtunkhwa only 14% because of their population, but they have hydro wealth. So practically you are depriving these provinces of their rightful taxation rights. And I wonder that when this NFC award was being negotiated, and then thereafter we forgot that we have to do it again 8 or 9, and there is no seriousness on the part of Parliament to actually do it. Although committees met only once or twice, and I wrote about that. So we need to emphasize that in present days Pakistan, we have to have a very judicious, fair taxation. But at the moment, what I feel is that because of capacity, Federal Board of Revenue is not collecting sale tax to the full amount, and they admit because this large retail sector that they are negotiating with them. So this is, to my mind, primarily is the issue of provinces and not the center at all. So they should get rid of this, and we should renegotiate this vital issue in Pakistan, and then we ask provinces to create some surplus so that ultimately our GDP deficit. How you can do this, that you are asking a province, I want 300 billion from you as a surplus? But isn't this a kind of autonomy that we were thinking and contemplating after 18th Amendment?
Before I give it to the next speakers, there are some questions online. So, Sahita Parde, please. There is one question for Dr. Ikramul, and they have asked that can you please speak about the constitution or legality about those persons who earn less than the threshold, such as the blue-collar workers, but still they are paying the withholding tax on their services such as telecom, top-ups and others, about the legality. And there are two other questions, one from both of them are for Dr. Hamidati. The first one is, do you have the research on the market size of the domestic textile sales, saloons, doctors, clinics, and these sort of subsectors? And lawyers. And lawyers. And this list goes on. And doctors is included. But and the second one is, when can you make the FBR's monthly, quarterly reporting to be more public on with more details, breakdowns, especially with regards to the sectors, regions, cities, and these sort of things?
Let's go on to Athar Saab, then I think Hamid Saab has the bulk of questions.
Well, fortunately, I don't have any questions, so I don't have to respond.
Hamid Saab, challenge.
Chancellor, there is a lot of questions and I'd like to try to answer them quickly. One is the question related to exemption provided to CPAC. So CPAC comprises of three things. One is its power in projects which are treated equally as the other power projects, and the exemptions provided to them have also been provided to them also, but luckily few of them are owned by Punjab government and other provincial governments, and hence that exemption has not been extended to them. The Gwadar part is a problematic part. It was a 2007 concession agreement which was done with the Singapore authority. Then the Singapore authority disappeared and the Chinese came in 2013 into it, and we have to extend the 40 or 30 years exemption that were committed by the then government. It's a sovereign commitment, so we have to live with it. It was at that time people who were at the helm of affair must have decided it on merits. And the third are the Chinese government grants given at a very low interest rate, and the previous government obviously allowed them exemptions on those projects, which are generally we provide on grant and aid, but they carry some sort of interest also, but nevertheless they have been treated like that. On the part of this top 2 issue, I'll say that we have been very careful this year. The Pakistan Raises Revenue program of World Bank is on the website, and you can see that we have not committed to any conditionalities. There are 10 broadly defined DLIs on which we are following, and the increase in number of taxpayers and increasing the tax to GDP ratio is something very close to our heart also. So World Bank this time has not imposed any conditionalities, it has not state directed. It is an open program and left to the government of Pakistan to do. The statistics issues is coming up again and again. We are trying, our yearbooks are available. It is in Excel form. The data from 71 to now is available in Excel sheets. If you go to our website and open the link in SPRS, the Strategic Planning and Research, you will find all the yearbooks and the Excel sheets attached to it. But I think that this year, when we were preparing the tax directory, we tried to give an annexure to that directory in which the year, in which the city-wise and the market-wise taxes have been also declared. It will be soon after the cabinet approves it, it will be made public, and we also think that there is a need to share further data that we have on like textiles, on beauty saloons, how many numbers are registered with us, how many traders. Everything is available and should be made public, and we are going through the process of making it available on our website. Regarding piloting of things, I looked at the 2 amnesties. The first amnesty, the 60% declarations came from Karachi, 30% from Lahore, and 10% from rest of Pakistan. The situation improved in this latest amnesty, where the share of other cities are showing up. Taxation is basically a metropolis phenomena or big cities phenomena. So whenever we do some policy changes, it is actually piloting on Lahore, Karachi, Faisalabad, Peshawar, Islamabad, and Multan. So these are the cities that we keep the data. The majority, 99% of taxes are received from these 6 or 7 cities. So it's not a nationwide phenomena in that sense. Then there was a question about the school fees withholding taxes. It's a tax and education fee of 200,000 and more per child. It's only subjected to withholding tax. We might abolish this tax this year, or we will lower the rate only to get information on the people who are spending so much on their children education, so that they should also be declaring their income. But we are sensitive about this thing. Then the non-filer and Schedule 10 issue. The last year we changed that every person who is not on active taxpayer list will suffer the double amount of tax, but it will not stop over here. Right now we are going through the income year process. So at the end of this year, when the next returns are filed or the next returns are due, these people who have some withholding tax deduction but actually have not filed return will be issued notices, and there is an automatic phenomena of assessing their liabilities. So we are not leaving it to their, this is only a change in form that their double amount of tax has been shifted to Schedule 10. Schedule 10 prescribes a full procedure of assessment of these people. We know that we have weaknesses in our enforcement mechanism, but nevertheless, this is the first step towards that. Then there was a question about the tax policy being bottom up. I think every year, this year also, we are scheduling from 20th of March to 31st of April. We are meeting all trade associations, chambers, and everybody who wants to represent and give suggestions. Our website has a special portal for filing of these tax proposals, and we do a lot of exercises and workshops on that. Before, it's a all bottom-up approach. Again, at the very last moment when the lead capture comes in, some things change, but our process is pretty democratic and bottom-up. So these are, I think, what the issues asked from me.
Thank you very much. I think there are a number of issues in my mind, at least large number of issues. I won't go into them. I think quite frankly, lots of issues in my mind, but we leave them for the time being because time is pressing. We'll have a 15-minute coffee break. I'll urge you to look at our brochure because all the issues are there. I'll urge you to consider those and ask people this question. One final thought, consultation होती है. हमेशा वो consultation जो होती है वो सिर्फ अमीर लोगों के साथ करते हैं. You don't do the consultation with poor guys who are paying you withholding tax. जो अभी सवाल पूछा था online. Those poor guys who are paying you withholding tax on phone bills, those poor guys are never consulted. It's only the rich guys who sit there, and those guys then obviously influence you. That's why the deal capture happens, sir. So I've been saying this for a long time. Please stop meeting the chambers with the rich guys. Meet some poor people too, and in particular, research. You never meet the evidence. It's time you involve the evidence in your research. Anyway, that's
because I didn't want to talk about the Constitution and the NFC awards. Maybe we should have a session at some stage because one has views on that.